What's going on, traders? Welcome back to another video. In this video, we're going to be walking you guys through the moving average convergence divergence indicator, or commonly known as the MACD, kind of abbreviated MACD. So this is an extremely common indicator used for trading. I myself don't use it all that much for reasons of how I trade. Most of the time, when I'm trading, this particular indicator doesn't really suit me the best, but we're going to walk you through in this video, A, how you set it up, which is super simple, and then B, which is the most important part, how you would really go about using this in your trading, and then also point out a few situations where this won't work well in your trading. So I'm going to try and give you the full detail and the full spectrum of this moving average convergence divergence indicator and how most people are going to go about using it in their everyday trading. All right, so first off, I'm on Thinkorswim. It's TD Ameritrade's software that we use for trading. Most softwares, trading platforms will have the availability or option to use this particular indicator. The indicator we're referring to is going to be down here, this guy. Now, you guys have probably seen, some of you guys, if you're older, been subscribed to the channel for a long time. If you're newer, it doesn't really matter. But a lot of you older traders in here, you guys have probably seen multiple videos on how you use this particular indicator. So if you already know what's going on, how to use it, and you're surpassed this point in your trading, you might as well just get off the video. There's no point in watching it. But if you're newer, this is the video you should be watching. So this down here, this is the indicator we're looking for. Now, chances are you've come across somebody trading on YouTube, somebody's screen showing you something, and at one point you look down and seen this pretty green, red, blue, white line thing down at the bottom of the chart, and you ask yourself, what is that? Maybe that's the tool that I'm missing to make it in trading. Maybe that's what I'm missing. That tool that's on the bottom of everybody's screen, that's what I need to make money trading. That's also false. That's not what you need to make money trading. It's just an indicator. So if you're thinking that route, it's not the right route. But let's get into it. So first things first, you want to go up here to your studies, which is this little beaker. So you click studies, and then you would type in here MACD, and that's going to pull up MACD. You click MACD, hit add selected, and then you hit apply and OK, and there you go. You don't have to go into any of the general settings of the indicator. It's all preset default that it is the way it's supposed to be, so don't change it. It's correct the way it is, all right? Now, of course, if you want to do something to it to try and test something in the future, by all means, go ahead. But generally speaking, it's the way it should be as soon as you click it. So now that you have it set up on your chart, of course, this is what it looks like. Also, let me go back in here. If you wanted to, and you wanted to be at the top of your screen, you could also just grab it, and you could pull it up here and put it right there. And once you hit apply, it would obviously be up there. So you can actually put it on the chart if you want to. Nobody does that, but if you wanted to, hey, you can. All right, so we're just gonna go back down to here, and we're gonna go lower, hit apply. All right, so now that we have it on the screen, really, it's a very simple indicator. This is not something you want to confuse or anything like that, or to get too in depth with it. It's super simple. So let's make this a little bit bigger so you can see it. Then we'll zoom in here on some of the charts. So ideally, this is the way it's used. This is the moving average convergence divergence indicator right here on the bottom. What this is it's a momentum indicator, momentum, right? So it tracks and tries to project momentum shifts in a stock or in a security or in the overall market. So again, it's a momentum indicator. It's supposed to help you identify the shifting in momentum from up to down. So if you wanted to be long on a stock or short on a stock, this indicator is supposed to help you identify when momentum is shifting in a stock from the upside to the downside, so you can either exit, get in, get out, not lose money, make money. You get the point. So that's what you're using this for, is to help you identify momentum or trend change, shift, change there, all right? So the way we use this is when the blue line here crosses up and over the gray line, it's supposed to classify as bullish. And then when the blue line crosses down below the gray line, it's supposed to signify bearish, all right? So again, look at blue line cross gray line, bull, blue line cross down on gray line, bear. Blue line cross over gray line, bull. Blue line cross over gray line, bull. You get the point. So every time the blue crosses up and over the gray, it's seen as bullish. And every time the blue line crosses down and below the gray, it's seen as bearish. Clearly, not every time that it does that, it's supposed to be seen as bullish or bearish. You still have to look at the stock chart, make some determinations on whether or not that is a good reading, because the MACD here can give you multiple false readings all the time. So let's look at a few. All right, blue line crosses gray line. It's supposed to be bullish. If we go straight up at the chart, look what happened. All right, so blue line, if you took an entry on this indicator solely, when the blue line crosses the gray line, you'd be getting long, like right there. You get this little pop and then boom. And then you would go down here and you'd have this little question mark and you go, well, I thought the blue line crossing the gray line was supposed to signify that it's bullish. And then it didn't work. Trading's a scam. This is a BS indicator and it doesn't work. No, it's not that the indicator doesn't work. You're just using it at the wrong moment and the wrong time. Okay, this right here, this indicator is not your 100% solve all issues in your life, okay? You're still gonna have to do a lot more research into learning how to trade efficiently. So this blue line crossing over the gray line doesn't always give you the perfect spot, right? So you got this cross right there. You go straight up and look at the stock chart. You get this little pop and then it drops, okay? Now, let's go look at this one right here. All right, so the blue line crosses the gray line, so you get long again. You're gonna be in long right about there, pops up a little bit, rolls over, back down. So then you're gonna go, well then again, this is a bad indicator. It doesn't really work. And not entirely, because if you did get in here at this cross, Netflix did pop up a little bit, so you probably had some room to make a little bit of money, but it's not a big win where you're looking for something like that, okay? So let's come over here to the big rip, right? So blue line crosses gray line, you get long, and then you have this amazing run. Now you ask yourself, well, this cross here is basically the same thing as it crossing there, is basically the same thing as it crossing here. Why are all these crossed? They're all very similar, right? They're all crossing, same type of similarity. Why this one shot so much over this cross, right? And this cross, why? That's because the moving average the moving average convergence divergence, the MACD does not dictate price movement at all whatsoever. The MACD has zero relationship between what actually happens to a stock and what doesn't, or however you want to put it. Again, the MACD is an indicator to help you track shifts in momentum, okay? It's not there to tell you, hey, momentum is shifting for sure 100%. It goes, hey, we think momentum is shifting based on the set of criteria that this tool uses, and now it's up to you to determine whether or not the whether or not the reading or the signal you're getting from the MACD lines up with the stock chart, and that is in fact a good indication you should be buying. So now your next question to Connor goes, well, Connor, now that you said all this, what is the good indication to get long based on one of these crossovers? Well, there's a few things. There's multiple things, all right? So if you're looking at Netflix right here and it's on a clear downtrend and you're getting this quick little crossover, it's safe to say that this probably isn't the best one to trade because it has been downtrending and this is just the first cross, right? So maybe give it a break. It's still downtrending, right? So now let's look at this one. Right, downtrending. So we're downtrending, we hit the trend, down, right? And then we break over trend with the cross. That is a much better setup to take considering we had been downtrending for a while, right? We just broke trend and we got a cross. That's two signals in one. Right, I'm not gonna draw it all out, but you get it. That right there is two signals in one. Actually, I got this new nifty little tool that I bought the other day. It's actually a little pad that allows me to write on the screen since we always have trouble in our private classes. So let me do that. Let's see if this works better. Let's see, where are we at? Oh, you're on that screen? Why are you on that screen? That's weird. I don't know. Maybe, oh, there we go. Whoa, here we go. So yeah, you are looking at, I guess it kind of works. Not really, it's still a pain to use, but we'll play with that at some other point. So you get the point. Try to do something cool, failed right in the middle of the video. Fantastic, not editing it out. Anyways, so you see you have the cross over the downtrend here. All right, so we had the downtrend and then we broke over that downtrend. So that is already from just price action, simple price action on a chart right there. That cross is already saying that's a shift in momentum. The price action on the chart is telling you shift in momentum because we were downtrending. We broke the downtrend, okay? You match that up with the cross here on the divergence, right, the MACD. Now you have two signals, okay? So there would be two signals for a buy. All right? I mean, if we go back further, there could be a fourth signal, right? Let's go look at a 3-year chart here. All right. Oh, we're like right here. We are at, Here's another signal that that was a buy right there. Boom. Right at a previous support level. So you have a previous support level mixed with the break of the downtrend, mixed with the crossover here on the MACD. Now you have 3 signals as a buy, right? Oh, let me get out of here, go back into the earlier time frame. Let's do, we're on a yearly chart. Yeah, probably was a yearly chart. Yep, there we go. So now we have, as we said, we have 3 signals now, right? We had break of the downtrend, moving average crossover, and we had previous supports. Now we have 3 reasons to be buying there. All right? So that's what you're looking for. You're looking for all those things, all in one. Your moving average crossover divergence is not going to be your golden indicator that's going to be able to predict every single move for you. You need to be able to go look at the chart, understand what's happening in the chart, and then put that, and then add the MACD to what's going on, and then say, okay, this is the right time to buy, right? All the MACD does is try to help you identify shifts in momentum. And the only way you know a shift in momentum is going to happen is if you can look at the stock chart and say, this thing is sold off too much, we're at a good bounce area, and then you go look at your MACD and go, yep, the MACD is showing that it's starting to shift in momentum a little bit, probably not bad. Also, you want to see something else here, right? The MACD was downtrending, bounced, the MACD even put in a higher low. So theoretically, on the moving average convergence divergence indicator, it started to uptrend here, right on that low point. Okay, so there's a couple things you could be looking at. Let's go look at something else. We'll go look at Roku. I don't know why. We'll just pick Roku. Sure, why not? All right, so like here's a good example. Oh, moving average crossover divergence breaks right here, which would put you right there. So you hop in long at the crush. Oh, little nothing, back down, crushed. Oh, well, what doesn't make sense? Why didn't it work? This is a scam. Trading's a scam. You can't win money. It's all fake. It doesn't work. Nope, you're just probably doing it wrong. Okay, so you see the crossover here. Well, that's in line with the downtrend. Okay, I mean, arguably, downtrend broke a little bit. Oh, let me get a straight line. Okay, you can say, okay, well, Connor, right? We had a shift in momentum. The trend broke, right? I see something else. Well, the trend broke, but it's all staying below the 50 moving average, which is that red line. There's another signal not to buy, right? It hasn't broken this 50 moving average. That's another signal it's saying still don't buy. And again, so that could be one where you play this momentum break with a 9 crosses, okay? And then you get long, you make maybe a tad, a little bit of money, and then it goes right back into the downtrend, right back to where it was. All right. So again, this is not a perfect indicator, and I wanted to show you a few examples. All right. So at the end of the day, this is a shift in momentum. That's what it does. It helps you identify shifts in momentum. Oh, look at this. Here's another signal. So we get a nice crossover here. Okay. We get a crossover. The moving average, right, the indicator just double bottomed. So the indicator itself double bottoms, and then we get the cross, right? And if you go straight up, okay, straight up at, was that the cross? Maybe a little bit, arguably a little bit over, maybe a little bit more. So we're starting to get this cross right here at 2630. Let's zoom out on the chart. Let's see if 2630 is anything significant. Is this a big enough chart? We'll see. Kind of. We'll do a 3-year chart. Okay, so we come to find, oh, would you look at that? The $27 mark on Roku is basically the IPO pricing of the first candle, right? This big green candle. This is the first day of Roku becoming a publicly traded company on the stock market. And you come to find that the first candle on the day that they opened in the stock market comes to be exactly where it bounced. Opening IPO price, not opening, but high of that day, right there. Look at the volume coming in here as well. Massive volume. And we get the cross. So you have massive buying volume right on a great support system at a low. And then you go and look at it. That's probably the one to buy for that crossover, that shift in momentum. Okay. So as you can see, the moving average crossover, right? That indicator, you get it, the MACD. It's not necessarily there to say, hey, this is the golden indicator. You still have to match up so many different levels and things on a stock chart to still give you a great entry. But now it's not a golden indicator. It won't make you rich fast. It won't make you rich overnight. It'll help you make some money here and there as long as you have all the other fundamentals of technical analysis down for a stock chart. Again, this is just one small piece of the pie that you need to learn to be a successful trader. So I hope this video helps you guys in determining how you should go about using the MACD and kind of what people are looking at. I guess it's not the all too golden video that's going to help you make trillions of dollars, but this is definitely a video that should help you guys in your learning curve. So if you guys like the video, give it a thumbs up, like, share, subscribe, and as always, thank you guys again for tuning in, and I'll see you guys on the next video.